This is going to be an accounting quiz for entry-level accountants. It's going to be 12 questions, and I want you to go ahead and mark a point for each correct answer that you get so that we can go ahead and grade the final result. So if you get 10 plus correctly, that's excellent. If you get 8 to 9 correct, that's good. If you get 6 to 7, then you need to focus a bit more. Less than 6, you need to study. All right, question number 1. Which of the following is not a core financial statement? A, the income statement. B, statement of cash flows. C, the trial balance. D, the balance sheet. Let's start a 10-second timer. Right. And of course, the correct answer is the trial balance. The trial balance is not a core financial statement. It is a financial report that you generate at period end to help you generate the adjusting journal entry to close the period. It's also a report that you share with tax preparers and auditors because it contains all of the accounts that make up all of the financial statements. So the answer is C. For question number 2, who is considered the father of accounting? A, Luca Pacioli. B, JP Morgan. Or C, Arthur Andersen. Let's go ahead and start a 10-second timer. Right, here we go. So the correct answer, of course, is Luca Pacioli. The Italian Luca Pacioli in the 1400s started the system of double entry bookkeeping, which became the basis of the modern accounting that we know today. Of course, for B, JP Morgan, he was an accountant himself, but his contribution were mostly in investment banking. Arthur Andersen was the founder of the accounting firm Arthur Andersen that collapsed or went down with the collapse of Enron. His contributions were mainly in the development of auditing standards. So the answer is Luca Pacioli. Okay. For question number 3, which of the following account types increase by debits in double entry accounting? Assets, expenses, and losses. Assets, revenue, gains. Expenses, liabilities, and losses. Gains, expenses, and liabilities. All right, we have 10 seconds here. Increase with debits. All right. And the answer is, of course, assets, expenses, and losses that has a nature of debit when it increases. So if you want to increase an asset, you debit it. Same for expenses and losses, share the same nature. So they're both a debit to increase. All three are a debit to increase. All right, question number 4. Which of the following is true? Accounts receivable are found in the current section of the balance sheet. Accounts receivable increase by credits. Accounts receivable are generated when a customer makes a payment. The accounts receivable become more valuable over time. Let's start a timer here of 10 seconds. All right, and of course the correct answer is accounts receivable are found in the current section of, or the current assets section of the balance sheet. The accounts receivable increase by debits, so B will be incorrect. For C, accounts receivable are generated when a customer makes a payment. That's not when you generate an accounts receivable. You generate it when you issue an invoice, not when you get a payment from the customer. The accounts receivable become more valuable over time. Actually, they become less valuable over time because you have to book an allowance against them. All right. 4. Question number 5. A company that uses the cash basis of accounting will A, record revenue when it's collected. B, record revenue when it's earned. C, record revenue at the same time as accounts receivable. Or D, record bad debt expense on the income statement. All right, let's give 10 seconds. Here we go. All right, and of course the correct answer is A, record revenue when it's collected. That is the cash basis of accounting that is used by small companies, right? Of course, B is wrong because you record revenue when it's earned under the accrual method. That's not the cash method here. C, record revenue at the same time as accounts receivable. That is again an accrual principle. That's not a cash principle. D, record bad debt expense on the income statement. Again, that's an accrual principle as well, to record bad debt expense. The correct answer is A, record revenue when it is collected. All right, I hope that you're liking this video so far. If you are, go ahead and hit that like button and share this video with someone who might benefit from it. All right, for question number 6, which financial statement is a report of a company's revenue and expenses during a certain time period? A, statement of changes in equity. B, income statement. C, statement of cash flows. All right, of course, the correct answer is the income statement that has the revenues and expenses over a time period for the company. That is the correct answer here. All right, question number 7. How are a company's financial statements used? A, for internal analysis. B, for external negotiation. C, for compliance. Or D, all of the above. Let's go ahead and give a 10-second timer. Right? Of course, the correct answer is all of the above. Financial statements are used for internal analysis by management so that they can analyze previous performance and make decisions on future navigation for the company. B, for external negotiation. Of course, you use financial statements for that. In the case of, for example, of merger and acquisition, you're using the financial statements for that purpose. C, for compliance. Of course, the financial statements, as you will find them on the annual reports of publicly listed companies, you will find the financial statements, so they are used for compliance as well. That's why the answer is all of the above. All right. For question 8, which of the following scenarios increase accounts payable? A, a customer fails to pay an invoice. B, a supplier delivers raw materials on credit. C, office supplies are purchased on cash or with cash. D, none of the above. Let's give 10 seconds here. All right, and of course the correct answer is B, a supplier delivers raw materials on credit. That's when you increase accounts payable. A customer fails to pay an invoice. That has nothing to do with accounts payable. That's an accounts receivable concept. C, office supplies are purchased with cash. That's not going to affect accounts payable if you buy things with cash. And D obviously is incorrect as well. It is B, a supplier delivers raw materials on credit. All right, question 9. When are liabilities recorded under the accrual basis of accounting? A, when incurred. B, when paid. C, at the end of the fiscal year. And D, when bank accounts are being reconciled. All right, let's go ahead and start a 10-second timer. All right, so the correct answer is when incurred. When we're talking about accrual basis of accounting, expenses and liabilities are recorded when incurred, and revenue is recorded when earned, regardless of when the cash is spent or the revenue is collected. So the answer B is incorrect when paid because, again, payment is a cash basis of accounting. Here we're talking about accrual basis of accounting. C, at the end of the fiscal year. Somewhat correct, but not 100%, because yes, at the end of the fiscal year, you go ahead and record any unrecorded liabilities, but this is a accrual basis is incurring the liability. That's when you record it. All right. For question number 10, what would the journal entry be for a company that takes out a 5-year 100K business loan? So we have here A, B, and C, and D. Let's go ahead and see which one is the correct answer. 10-second timer. All right, so the answer of course is B, to debit 100K current asset, which is cash. So you're taking out a loan, you have to increase your cash, which is a current asset. And you're going to credit a non-current liability because this is a 5-year loan. If this was a 1-year loan, this will be a current liability because current liabilities are 12 months or less. This is a 5-year loan, a non-current liability. All right, let's go ahead and look at question number 11. Which accounts are associated with the cost of goods sold? accrued interest, depreciation, dividends, or inventory. Let's go ahead and start a 10-second timer. All right, and of course the correct answer is inventory, right? So as you sell your goods, you record a cost of goods sold against the reduction of your inventory. You record a cost of goods sold for the cost of that inventory. So that is what's associated with cost of goods sold. The answer is the inventory. Let's go ahead and look at question number 12, or the final question. What are the main sections on the balance sheet? A, assets, liabilities, income. B, assets, liabilities, equity. C, assets, liabilities, expenses. Or D, asset, gains, or revenue. Let's go ahead and start a timer here. Of course, the correct answer is assets, liabilities, and equity, which is referred to as the accounting equation. So the main accounting equation is that assets equals liabilities plus owner's equity. And that is because assets is what you own, right, as a company, equals what you owe, which is liabilities. You owe liabilities to third parties, and equity, you owe that to the owners of the company. That is what the owners of the company own as a stake in the company. Assets equals liabilities plus owner's equity, and that's what's going to be on the balance sheet. So the answer is B in this case. All right, so go ahead and tally up the points that you gathered for this quiz and write it down in the comment section below. I want to see how many you got correct in this quiz. Again, this is an entry-level quiz. If you liked it, go ahead and hit that like button, and I'll see you in the next video.